Alright guys, class is getting ready to start. For those of you that's getting ready to watch this on YouTube, check us out on Twitter at WTrades. That's DUBYA Trades. Also, if you appreciate what I'm doing and you think I'm bringing value to the community, hit that like and subscribe button. And let's jump right into this. Let me set everything up here. If you have any questions or comments, let me know and we'll go over anything you need to. I'll check back periodically. Alright guys, I'm just letting some people gather up and get in class. What in the world?
Are you still in this trade?
Oh yeah, I'm holding till tomorrow for sure.
Wow.
Yeah, let's see what we got here. Trying to see, I believe what I'm gonna do on this one, because I'm gonna right here in the beginning, I'm gonna no, I'll just leave it like this. I was gonna say I'll put it on my follow me page, but um, I believe we can explain it the way it is, like some of these charting patterns and stuff like that. I was trying to figure out the best setup to do for it. Let's see. Something here I was going to mention on the SPY too when it came up. And then here near the end of this, if we got time and people want to, we can take a look at a few stocks anybody wants to look at, things like that. Get rid of this. We put Celine back up here. No, as a matter of fact, let me take Celine off right now. There it is. That's what I wanted to blow up. Let's see what we got in here. Alright, we'll just go ahead and jump into it. And anybody that jumps in late, they jump in late. We got a few watching on YouTube too. Let's see. See what we're looking at here. Alright, let's go ahead and jump into it here. We got a couple on there. Okay, guys, so today what we want to look at is candle and charting patterns and what they mean, how they can help us out, things like that. I put a couple of pictures up in the education that talk about classic charting patterns, candlestick patterns, and then some more like detailed candle patterns, I guess I could call them. There's a few, like there's two charts here just on candle patterns because there's a couple on the second one that's not on the first one that I think are very important that I like to use a lot. So let's start on charting patterns, and this is what is our double tops, our head and shoulders, things like that. So what is a double top, a head and shoulders? What are those patterns, and when are they actually confirmed to be that? So let's take with what I have pulled up right here in this area. Let me pull it up right here. So right here in this area, this can be considered a double bottom. So the prices came down, it's pulled back up, it's went down again, and then it's taken off. So when did this become a double bottom? What makes it a double bottom, besides what I just showed you right here? And when do we enter this trade? So a double bottom is when the candles or the price has come back to a support level or just a level twice, and then it's taken off. Like I said right here, it's more like a W shape. It comes down, it pops back up, and then it comes down again. Traditionally, a double bottom, the center spike will not be higher than the two outer ones. It usually, for me, I like a double bottom to be on a support and resistance plane instead of more of a trend line plane. Even though there can be a little bit of leeway here, like as you can see with this one, it's not exactly perfect onto that if we take candle to candle instead of wicks. So there is a little bit of leeway here, and really when we get down into details, a lot of people are going to call it a little bit differently. Others will say no, it has to be perfect. Others say no, if it's on a trend line or on a moving average, it's a double bottom. But for me, it needs to be on a horizontal plane, and when it comes out of it on the other side, so if we're looking right here again, let me draw this, we come down, pop back up, and touch. It's not a confirmed double bottom until it comes back up and it crosses this threshold right here at the top. So it's came down, came back up, double touched where it did back over here, popped back up over that resistance, over that little, I hit that too many times, didn't I? Let me see. Get rid of that. So let me go to replay here and let me show you exactly what I'm talking about. So this is the way it would have set up. This is the way we would have seen it. It came down, it's popped back up, it gets rejected at the 50, and let's just take it from here. Let's see, speed this up just a little bit. Oh, sorry about that, it's way too fast. Let's try this again. So right there at that moment, when it is popped back over this line right here, that's when it's confirmed a double bottom. So does that mean you have to wait until that point to play that? Not necessarily. I mean, if you're just starting out with these patterns, I would say yes, wait on confirmation. But you'll see some people that once this first candle popped up, if there's volume coming in and other indicators are looking good, they may go ahead and jump in that trade knowing that they may have to get out if it doesn't confirm over this, or if it doesn't start heading in that direction. So the key with these patterns is to know what actually makes them that pattern, if they're bullish or bearish, and how to set up those plays. Now for me, I like a little bit more confirmation. I normally would wait for it to confirm a double bottom, but like I said, some people would see that starting to set up. They'll say I won a little bit early, but knowing if it does get rejected before it hits that or it passes over it, then they would get out. Now, traditionally, a double, get rid of that, a double bottom is bullish. Usually when you see that, you're looking for it to go back up. I think it is this one. Yes. So on this one, we're looking at a larger time frame. And we are looking at a double top. So we're looking for it to hit here, come back up, get rejected. But this is not going to confirm a double top until it passes under here. Now again, once you see it coming down through here, you can go ahead and jump in and play it to this. And usually on these larger time frames, that's the way I will do it. Once I see it starting to reject, I will jump in. Let me get up my drawing tool. So it sorry about that. So it's came down, it's popped back up, and it's starting to reject. So I may jump in on a swing trade, and I'm looking for it to get right back down to here. So I'm playing it to here, knowing that if it rejects here, I'll get out. But if we look here, that's a couple dollar moves. That's already good enough. So if I'm playing options, I might want to pick my strike somewhere in between that, 84, 85, something like that. But if it breaks down below this, we can continue to hold, or we can take profits on that one and get into a new trade. But this is our key area. This is what we're playing it to. This decides whether we're going to hold it or take profit here. And just the same, if we're looking at a stop loss point, we could pick if it comes, breaks over the double bottom, because these can triple top. That brings me to CLF. I'm pretty sure this is the one. It was this one or Wells Fargo. Let me see here. Yes, right here. So with this one, I was playing it, and we can see that it's 1, 2, 3, eventually 4 tops before it finally broke free and came down. So what I did is I seen this triple top sitting up right here. I entered somewhere right around when it crossed underneath this 50. It popped back up the next day. A few people that took the trade with me, I know, exit out of that trade when it popped back up. But me knowing that they can always pop back up to this area, I stayed in. I waited to see if it was going to break over or reject again, and sure enough, it ended up rejecting, coming way down, and I was able to go and profit, actually in the money on this trade. Same thing happened with Wells Fargo. If we pull out, I don't know why all these are starting to top up here. Now this one's a little different. This one kept getting, it didn't actually triple top, but it kept getting higher lows, and we kept getting rejected. I actually bought in on this day. Again, some people I knew that entered this trade with me got out in the morning because it started going up. But, you know, it's always good to hold the first 15 minutes there, or at least wait and see what it's going to do. I mean, if it's taking off, get out. But, you know, this, I had a plan. I already had my trend line drew. I knew that it could pop back up, so I waited, and sure enough, it came back down. And this one, I actually had some 47 lotto puts on it, and they almost went into money. I mean, they did end up going into money, but they almost went into money before I sold. So when it started U-shaping here, I kind of got out around, it was like 47 and some change. but that was a pretty neat play. I ended up getting, I think it was 51 and 47. But we had seen the setup, it kept getting rejected, and we got out. So if we're talking about charting patterns, some other patterns that you might hear is a head and shoulders. So what is a head and shoulders, and what does that mean for the chart? Again, let's go back to Zom. This is one that I was waiting to set up, and it never did, at least not the way I wanted to. Keep doing that. Sorry. Give me 1 second, let me get rid of these. Okay, so if we pull back out here to the 4 hour. Now this is one that is not exactly on a horizontal plane like we was talking about. It was more on the trend line plane. I wasn't going, let's see, I can get rid of this because I wasn't looking at that. But a head and shoulders is exactly that. It is a left shoulder, a head, and a right shoulder. Now, traditionally, usually we like the shoulders to be on a horizontal plane. I was looking at this on the trend line, so it's not exactly. And usually on these setups, like I was telling you earlier, sometimes there's a little bit of leeway. That has to come up with you, but traditionally you want these more on a horizontal plane or the support and resistance lines. But the shoulders are usually the same height along with the neckline. And that's, sorry about that, I hit the wrong thing. Along with the neckline. And just like on the double bottom, we know it's confirmed when it reaches and breaks past that neckline. So for me on this setup, we was right in here. When it started rejecting off of this shoulder line, I jumped in. I picked some really close in the money or near the money puts, and we played this. It came down. I got either in the money or near the money. I sold those. But my plan, just like on the double top we talked earlier, was to jump in early, play it to the neckline, and then if it got rejected, get out. If it broke free, then continue on. We can see here that it got rejected even before it reached the neckline. So I got out, waited for the next setup to see if it was going to come back up and get rejected again and come down, but it never did. We can see that it continued kind of like in a consolidation, a little bit of a trend upward. But that's how we can play these patterns without actually waiting for them to confirm first. But that's the shoulder, the head, and then the shoulder. The main things we're looking at here is the shoulder line and the neckline. The same is true with this on the inverse. Now, the normal head and shoulders is a bearish pattern. We're looking for them to come back down. The inverse of this, if you just flipped it, that is a bullish pattern. And we're looking for it to go back up. But again, the key points on these are the shoulder line and the neckline. We could go into cup and handle, but to be honest with you, I really don't like trading the cup and handle, mainly because there's other things you can notice near the end of the cup and handle. And cup and handles are so vague. Some people like them to be the perfect cup, the perfect handle, and shoot off. Other people, they're jack it all to hell, coming down, back up, and then back up. And it's just so, what's the word I'm looking for? Everybody has their own version of it, right? So, usually with these, the ones I usually stick to are the double bottoms, the double tops, the head and shoulders, I'm trying to think if there's any other big ones I play. That's really, just off the top of my head, the big ones that I play. There's more patterns than that, but those are the big ones I played. So, with that being said, let's look at other charting patterns like flags, right? And if you look at the charts that I put up earlier, let me on YouTube switch this over to my browser. Okay, so if you're on Discord, if you want to go over to the education part and look at the one that says classic charting patterns, that's what I'm looking at here. That'll save me from having to drop out of that window and going into another one. So what we're looking at here at the top is reversal charting patterns. And if we're looking at, let me get back there, sorry about that. If we're looking at them here on this chart, we can see that there's bull signs and bear signs. The top ones being the bull, the bottoms being the bear, and the way these set up. And if you look at these first ones right here, you're going to see what we just talked about. Double bottoms, double tops, head and shoulders, and how they look in a more flag type position. And you can see here that the double bottom are bullish. They tend to more break to the upside, along with double tops are more bearish. They tend to break to the downside. Head and shoulders are the same. Now, a couple that we want to talk about here are falling wedges and rising wedges. This is where you have a stock that is coming up or going down, and they start to, if you draw trend lines on the bottom, and I'll show you here on the chart in a minute, if you draw trend lines on the bottom and trend lines on the top, they form a wedge inward. Now these will be different than triangles that I'll show you here in a minute, but with these, traditionally, the falling wedge is going to be more bullish. The rising wedge is going to be more bearish. Now, with that being said, I'm not saying as soon as you see a falling wedge, put all your money on that stock and jump in. We normally want to wait for confirmation. And if you're looking at the chart now, confirmation would be when it breaks that top trend line and breaks upward. So with that being said, let me see if I can find one on here. Usually the SPY are good for falling wedges and rising wedges. So let me exit out of this, go back to the normal chart. I should have had a couple of these picked out, shouldn't I? Okay, here's a decent one, I guess we could say. At least, if not, we can kind of fudge it a little bit and make it look like one. Just to get the point across. So we can see here that it's flagged up and it's come up. And the reason I say we're going to fudge this a little bit, usually it's not going to drop down like this and come up, but let's go with this right here. Like I said, we're going to kind of fudge this a little bit. So normally you want these to be, this is kind of a terrible one, but let me just get my point across. On a rising wedge, right, you're looking for a breakout to the top or the bottom, right? So since we're going to fudge this one a little bit, let's get in here like this. let's say that it's coming in. See, that's more like not a wedge. It's not wedging, but what you want to see it like if we had the trend lines in here like this, and they're wedging toward each other. So what we're looking for is a breakout to the top trend line or the bottom trend line. And a rising wedge usually breaks out to the bottom. So if we're waiting for that breakout and we get it, then that's usually your sign to jump in, buy in. We'll get into a little bit more of candle patterns and things like that to help you get a little bit more confirmation on those. But that's what we're kind of looking for, is this wedge shape. If you draw your trend lines and they are wedging in like this, like I said, the candles on this is kind of poor. This is not a rising wedge, but I'm just trying to get a point across. They want to wedge in like this, break out to the bottom, and they usually trail down. And the opposite is true too. If they're coming downward, wedging, breaking out to the top, we might be able to fudge this one too and see. Coming in, it breaks out to the top. But you get to the picture. If you're drawing your trend lines and they wedge inward, up or down, the opposite is true. So if they wedge up, we're looking for them to be bearish. If they wedge down, we're looking for those to go bullish and break to the upside. But wait for that confirmation. Wait for them to break that trend line. And that's your confirmation to say, okay, this is a good enough setup. Where do you go from here? If we go back to the charting patterns here, some of the others that we look at are the rectangle. That's exactly what that one was I was showing you a second ago. Falling wedges. Oh, we just did a falling wedge. Sorry about that. Rectangles, pennants, which are pretty much symmetrical triangles, just a little bit of difference, and ascending and descending triangles. Now, guys, we can go over all day which one of these are bullish, which ones are bearish. You know, in the end, it doesn't really matter if they're bullish or bearish. It really doesn't. Wait for that breakout. It's good to know if they're bullish or bearish, to just kind of get an idea of, you know, okay, I want to set up a bullish trade or a bearish trade. But in the end, if you don't get that breakout, then it's nothing either way. So what I'm talking about with the breakout is just like we talked about. We go back here. Is if we get the breakout of the trend line. And you're going to find this true with most trend line setups. If we go back to the beginning. Go back to the beginning of this. Get rid of those. And we went kind of far back, didn't we? Oh my gosh. I can't be that stupid, can I? Look right there. I keep doing that, my bad. Look what we found out there, guys. But, sorry about that. But then again, you know, we're looking for that breakout. You know, this is a falling wedge that we was looking for a minute ago. But in the end, we're looking for that breakout. And for me, these seem to do better on a little bit higher time frames. At least the setups do. I would recommend that if you're doing some of these day trades, draw your trend lines and just wait for them to break out. Like you'll see a Shimmy on there if you watch him a lot of times. He'll draw a trend line, like if we're expecting it to bounce, he'll draw a trend line on the top and we're just looking for it to break. You know, don't get so hung up on what these patterns are called. Why is that not exiting out? There we go. What these patterns are called, whether or not they're bullish or bearish, you can learn that as you go. The main setup that we're looking for is drawing our trend lines correctly. If you draw at the wicks, stay with the wicks. If you draw at the candles, stay with the candles. And looking for the breakout and what we consider a confirmed breakout. Now, I told you a minute ago we would look at candle patterns and draw a conclusion on how we can use them with charting patterns. Now, what is a candle pattern? Well, if you look at the charts I put up, let's go to the one that says candle pattern reference up above, and it's got understanding candles in the center. You see a green one and a pink one, which is supposed to be red. And it shows you like the body of the candles and all that. If we're looking at these are candle patterns. Excuse me. This is where you hear doji, hammer candle, engulfing candle. You'll hear me say 3-bar play a lot or 2-bar play a lot. You might even hear things being called a shooting star or a gravestone or things like that. This is where candle patterns come in. And for me, I find that charting patterns work best when you use candle patterns with them. Now, one of my favorite, and we'll get a better look at it here in a minute, is this rising 3 method. To me, this doesn't always have to be 3 in the center. The important thing that I look at on these is that whatever's in the center, whether you're bearish or bullish, is engulfed by the 2 outer candles. Like I said, when we go to the next set of pictures here in a minute, I'll show you an example of that. And the very next chart we'll be looking at on TradingView has this set up in it. But you usually want 1 to about 3 candles in the center, and it's going to go like red, green, green, red, or green, red, red, green, but they're kindly encompassed in the 2 outer candles, kind of like you see right here. And when we go back to TradingView right here in a second, I'm going to show you a setup where one almost confirmed but didn't, but then the very next set of candles they confirmed. Another thing that I want us to be mindful of are doji candles or spinning top candles. Now, in this Discord, you'll hear people use doji for both. A spinning top and a doji is not much difference, except for the spinning top usually has a little bit more candle in there, and a doji is usually either just a line or maybe just a little bit more than a line. And if you look at the top of that reference I gave you, you can see right there spinning top and doji. So if you hear me say doji, I'm usually referencing both of these. And then a hammer candle is just that. It kind of looks like a hammer. Think of Thor's hammer. Those are usually really good for identifying reversals. So again, if we're looking at the picture that I put up in education, you can see that on the bullish and bearish sides, the first 3 are doji candles or hammer candles that lead right into a reversal. And now that I pointed that out to you, you're not going to be able to unsee it. Most reversals you look at are going to have that doji candle. Not all, but a lot of them are. So let's get into going back to TradingView. And we're going to look at that same pattern that we first started the class out in with the double bottom. Right here. Now this is neat because we have several patterns already right here that make up the double bottom and lead out of it. Right? So if we go back to the replay mode, we come back to here. Now let's play this out to the next candle. So right here we see that it's come down its touch and it's popped back up and we get this green candle. Let's see the next three. Red, 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 then a green right there. That is that rising and falling threes, or my 3 or 4 bar play that I talk about. That is it in a nutshell. I love this pattern. It, like I said, don't always have to be 3 in here. You'll see right here in a minute we got one that just has 1. But the 3 candles are encompassed by the outside candles. You can see this one right here doesn't break above here, and this one right here don't break below there. And it's all together. So this is usually a bullish side, and the opposite is true. If we had red, green, 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 red, then we would expect this to keep continuing down. So let's keep playing and see what happens. Boom, there's that same setup again. Green, red, green. Let's keep playing. Boom, again. Green, red, green. And then boom, right there we have the 3 soldiers. 3 soldiers. So that right there already would be a bullish move. If we waited for that to break out, 443.09, 2 right up here, 444, we're already looking at almost $1.50 rise. That would be a really great snipe right there. And that's waiting for it to confirm. So let's continue on and see what we got. Boom, right there. Now you heard me say a second ago engulfing candle, so we're not looking at this candle, just these two. It started out green. The very next candle is an engulfing candle. An engulfing candle is where the candle completely engulfs the candle before it. So it's bigger, it comes down lower than the candle before it. And this is leading us into a reversal, at least a pullback, but probably a reversal. So let's continue to watch and see what happens. So now we are consolidating out this 15 and VWAP and support, all 3. So this is acting as good support, but we have this red, green, red pattern, just like we had here. It's not as pretty as we like to see it, but it's there. So let's see what continues to go on. Boom, we flushed down there. Let's see what that would have been. 4403 to the flush. So little more than 60 cents. Uh-oh, what did we get there? Another red, green, green, red, and it's continuing to fall. We're getting almost, except for this first set right here, the reversal of what just happened here. Boom, boom. Here we go now. And this one, we didn't get the engulfing candle, but the next candle green shot up and comes up right along here. Usually you'll see a doji in between these two like this, but this is just as good right here. Let's see if it continues up. Nope, we got rejected. So again, what we get here are red, green, green, and then red. So while we didn't get our reversal, it didn't come up. It came to the VWAP, got rejected, and came down. So let's review this, and this time let's throw in our moving averages and go from there. So we had the double bottom. We had a bullish candle pattern that led up over the 15, or in this case it would be near y'all's 20, for those that like to use the 9 and 20, and it crosses the 50. Now, if we would have entered whenever it crossed the 50, we would have seen over $1 to when it started rejecting. Then, let's say we get our engulfing candle, even if we wait for it to break VWAP, which is a smart move, but we wait for it to break VWAP, we enter here, that is 443. We wait for it to come down. If we would have exited here, what did I say, 443? So over $1 move there to there. We get our rejection at VWAP with what? Another engulfing candle, and it comes back down. That's how we can use candle patterns and chart patterns along with our moving averages. And guys, keep in mind with this, we did not even look at volume. We did not even look at ADX. None of that was paid attention there. So if you add these into your trades and keep an eye on them, that's how we can use these in conjunction with our other indicators like volume, ADX. And you'd be surprised at how quick turnarounds you can find, little snaps here and there that just seem to work, and you're more prepared. You got to understand with candles, it's all this battle, bulls and bears, and who's going to win out in each candle. And these play out in these patterns, and that's why the reason why these patterns work the way we look at them. But I put those charting patterns up for the people watching on YouTube. I'll put them on the Twitter too. They're very good to have, and they're very good to just get to know them. Learn your confirmations, things like that. So with that being said, and we've got into that, is there any questions or anything like that anybody would like to have?
No, Zero, I think you're doing a great job, man. This is great. I mean, Doji strategies, there's so many going into Doji strategies, and maybe we can build on that a little bit later, but, engulfing patterns are huge to look out for. It definitely shows a trend direction, and I don't know how often you trade with Heikin-Ashi candles, but within themselves they're kind of indicators as well. I know Shadud uses Heikin-Ashi a lot, but yeah, there's certainly a lot of patterns within candles, engulfing being one of the large ones, and then we have regular dojis as well as like hammers or gravestones and things of that nature. But yeah, I think maybe you could kind of expand on like kind of inside bars, meaning like you have one large candle and then maybe another candle that's still within that, what that could possibly entail, if it could start forming a bull flag or a bear flag, or what to kind of expect with that, if you know what I'm talking about.
I think I do, yeah.
Okay.
So, let me get back in here. Oh, let me check one thing out here real quick. Well, I don't want to leave nobody out on the other side here. Okay. Okay, so when we're looking at these candles, like he's saying, you can. It's good to notice like the dojis, the engulfing candles, things like that. They all have a meaning. That means that. So like if we're looking at an engulfing candle, it is when the bear side, for lack of a better word, is overtaking the candle or sell side, and we're see, how can I show you this on the chart? Coming right here, this candle right here. So we've came down, and we get some buying pressure coming back up, right? As soon as we've had it, we've got our selling pressure coming back down. I don't know if y'all can hear that or not, but we have our selling pressure coming back down. When we're looking for continuation, reversal patterns, things like that, these are the type of patterns that we want to look for. Engulfing patterns coming up, reversal, doji. I wish I could find one of these that we had over here. I just told you earlier that these are so common and I can't even find one. I believe that's about as close as we're going to get without trying to dive in here and look. Okay. So here we go. So we have selling pressure coming down with these candles. And we have right down here at the bottom as a reversal these spinning tops, dojis, things like that. And what we're seeing with the buying and selling going on here is that this is a level, whether it be investors picking a level or a support and resistance line or a moving average, whatever the case may be, this is a level where buying pressure has pulled in. So you know from a candle, a red candle, that the candle starts at the top and ends at the bottom. So when we're looking at a doji candle, that means, if we're looking at these wicks, that price has traveled all the way down, got bought back up, and then back down. So kind of think of it as like a battle that's went on there. So we have who's going to overtake it? Are we going to remain bullish, remain reverse, or whatever? It's came down, it's got bought back up, and now we're looking at our very next candle, right? If we have our next candle that's red, then we would expect that the bears has won that situation and we're going to continue on down, right? But if we have a candle that is green, that means in this situation, decision made, right? When we look at a doji candle, sorry about that, guys, that's my dog. We're looking at this as a decision being made right now. The market is deciding whether to reverse and pull back up or to continue on down. So we can tell by our next candle that at least somewhat of a decision got made. And I say somewhat because it's not truly an engulfing candle here. I would consider this to be more of a confirmation if that would have been an engulfing candle. But with this not being an engulfing candle, excuse me one second, guys. Sorry about that.
Hey, Doug. Just wanted to ask you for a favor. Do you have a saw in your shed that can cut this into roughly 1/3?
I do, but I'm right in the middle of a class real quick. Let me jump to you right here in just a minute.
It doesn't have to be done today.
Okay, I'll get up there in a second. Sorry about that, guys. So what we're looking at in here is we're looking for this, for the market to make a decision here and pull back up. So our next candle is green, but it's not engulfing. So it's more like, yeah, decision got made, but it's not a definitive choice, right? So we need, let's say we need a little bit more confirmation. If this would have been an engulfing candle, just like we talked about engulfing candles before, that would have been, or just like right up here, decision got made, engulfing candle, we're continuing on down. We want it to overtake the next, how can I say it? Almost kind of like a little swing low within this area. The next little level right in here. Right? The next little, sorry about that, the next little level. we're looking for that to get overtaken. Now, an engulfing candle would have decided that for us. We would have moved on, just like right over here, and kept on. But when you have these candles that don't do that, and choices still need to be made, or we're looking for a win out, these are where we can start to see flags starting to form. I think we had one back here. Let me pull out here and look. That might be one right there. Let's see. Trying to find this one here real quick. See if it'll blow it in right there. Oh, crap. Sorry about that. There we go. I'm trying to find a supply guide that looks really good. Okay, we can get that one. It's close enough to us. Like I said, I should have already had some of these picked out. Let's go with this one back here. Yeah, I believe we can make that one work. Let's see. Yeah, we're going to have to make this one work because I'm not going to spend all day here looking for a flag. Okay, so we've had our spinning top come down, but we didn't get a completely engulfing candle, so we're starting to kind of flag out, consolidate out for a choice to be made, a decision to be made on whether we're going to reverse, continue down. And this is where we start getting into those flag patterns I was talking about, as in rising wedges or falling wedges or symmetrical triangles. We're looking for a decision to be made as it's coming out. And it starts to form within these trend lines that we can draw. And just for us to look, let's just say we're going from here to here. I'm going to fudge this a little bit. Sorry, it's not going to be perfect. That's not good, it's not right, but just for our purposes here, we're looking for, it's trading within this range, let's call it, and looking for a breakout, looking for a decision to be made. And once that decision gets made, once we see that breakout, is this is one of the theories of why technical analysis works, you know, because other people are watching these levels. So once that decision gets made, people sees where it's at, they're going to pile in with buys or sells. In this case, we did get our breakout to the top. It did pull out or pull down a little bit, and then we take off. Because the decision was made, it just took a little bit longer to kind of catch up and pull back up, right? This is also one of the reasons why we wait on our confirmation on these flags, is because a decision's being made, and even though these normally get broken to one side or the other, we want to confirm that. We just don't want to hope and pray. Now, within these triangles, within these flags, you can trade between them. You can say, you know, sell, if we're talking about higher time frames. We was looking at, I don't remember which one, I had some. But let's say on this one right here, let's use this line right here, and let's call this one a green one, and let's make it a solid. So let's say we haven't got there yet. Close that out. So we can see that it's trading within this triangle coming up, right? Or in this case, an ascending triangle. You can trade within those. You can say, well, once it rejects here, pull down to the bottom. And this is one way of using snipes or scalps, things like that, trading within the trend lines. But usually, by the time you get to the end of that, you're going to see a breakout of one side or the other. In this case, we had a little bit of a fake out breakout, and then it came down, decision made, the market followed, we went along with it. All right. 1 second again, sorry. Okay, love you. So if we go back into it here, okay. So that's the way candle patterns and charting patterns end up working out. It is, we're looking at the decision to be made, which direction to follow, and to go in from there. That's the reason why we wait on our confirmations, why we are even looking for these patterns in the first place. If we go back to the SPY, like I was talking about there earlier on this double bottom, in a 3 minute. We can see that that's what's happened here. You know, I like to famously say that whenever you're looking at a double bottom, one of the reasons why a double bottom works is because people are watching it and they're looking for it, and they follow in once they see it confirm. For the people that don't follow charting, it could be as simple as saying, you know, they had buying pressure came in, they see it bouncing up, and they feel like, oh man, I missed my entry. If it would just return back to there again and bounce, I'll enter this time. I'll hit it. And sure enough, once it does, they end up entering. Now that's not so true on such a tight one like this. You know, who's going to really worry about that much of an entry? Unless they are scalping. But when you're looking at the larger time frames, things like that, it's these decisions, these choices that's being made that we can read through these candles. Again, if we're looking at the 3-bar play here, pretty much this is, it's popped up. We have some people taking profits. It's at the VWAP. They want to take profits, but the bulls are not done yet. So they end up buying it up, the next candle, and breaking over it. Same thing here. It comes up, it's reached near this 15 and 50. Some people are taking profits or getting out, or they think it's not good enough, they're getting out. But the bulls are not done yet. They're taking over. We can tell this by these engulfing candles, these 3-bar patterns, things like that. But those are some of my favorite setups in them. These are things that we can go more into detail. I'm kind of going back and forth, like what I don't want to go into rambling and do too much. I'm kind of hoping to ease into some of this stuff and to get us there. You know what I'm saying? Like each one of these classes so far has been little by little and continuing to go on. But I think this is probably a good area to kind of see what we've learned here, use them, learn them, and if you have any questions or if you need any help with anything, you know, we're always here. I'm always on here. CJ's always on here. Shadood, Shimmy, all them, you know, ask us. We don't mind one bit to answer a question or two. But I feel like this area right here is something that needs to be expanded on more, needs to be taught more. It needs to be, you know, it needs to be, it helps understand market flow. It helps understand reversals, things like that. And it goes all the way down to from candles, dojis, that stuff engulfing, into patterns, which lead into your macro scale and those patterns and how they go. So, you know, think of it like this. Over the last few days, we went over charting tools, we went over watch list, and we went over these candle patterns. So if you're the type of person that likes to keep a trading journal, which I recommend you do, I still keep one myself, try this out this week. When you're sitting there doing nothing at night, get on there, use some of those scanners, try to find a couple of plays or setups. And then in the morning, in the pre-market, watch those, see how they set up. Write it down. What did you like in it? What was the setup? Did it have a double bottom? Was it setting up for a double bottom? Are you waiting? How did it do in the pre-market? Did it start to rally, or was people uninterested and backed off? What was the volume flow like? And then as the day goes on, see if it sets up any of those patterns. See if you're looking for any reversals. Try to set levels. You know, well, if it breaks above this, I think it's going to go here. Or if it breaks below this, I think it's going to go here. Guess which candle's coming next. Do those things. Write them down. See if you're right. You know, you don't have to put no money in it. Just see if you're right. See how well it does. And you can look back on that and say, oh man, okay, I see. Here it was, you know, thought it was going to do this, but it didn't do this for this reason. And you can look back and see, well, did it not do that reason because I was completely wrong with my assessment? Or did it not do that because the market chose that it wanted to be bearish that day? Maybe the Fed spoke. Maybe sentiment just wasn't there. You know, whatever reason. These are good things to keep up with. It's good to have your own style. It's good to learn from these things and kind of set up your own methods. Like I said, for me, I love this 3 or 4 bar play, 2 bar play, 3 bar play, whatever you want to call it. Rising threes, falling threes. I love that because over years of watching these candle patterns, that's one that I usually see and identify really quickly. So, you know, I gave you a list of them there. I gave you several of them. What pops out at you? What do you see going bullish? You know, I'm weird when it comes to my moving averages. I use a 15 instead of a 9 or 20. That is weird. A lot of people don't do that, but it works for me in my trading. I learned that from following it and trying out different things, having my journal out. But like I said, I'm gonna. We've been at it for about an hour. I'm going to end it here, and I think in the future we're going to try to get into this a little bit more and compound on these patterns and what they mean and how they go. But for right now, I think it's healthy to just take what we have, try to use it, and see how it works out for us. And like I said, anytime you got any questions, anything like that, I'm here. You know, if you're the type of person that don't like to just put it out in chat, DM me. I don't care. Whatever. But guys, I'm going to end it here. Those charting patterns, pages, and all that, it's in the education. Also, there's been a few y'all asking about fib levels and things like that. I have a quick video up. It's a little bit older, and on that video I'm doing it on smaller time frames. That's something I want to try to maybe go into next Tuesday too. But for now, if you just want like a real quick and brief tutorial, also I put up a video going over options Greeks. Now this is not a detailed look. It just explains what they are and what they do. I don't think I'm really qualified enough to go into too much detail about it. That might be a CJ type question when it comes to those. But it's just the basics. And I know CJ has a few videos that might go in a little bit deeper into them too. But those videos are up in education too. And again, if there's anything that you guys have any questions about, just message me. Before I leave, is there anything else anybody would like to touch on?
Can you look at a chart real quick for me?
You betcha I could.
Thank you.
What chart is it?
Fastly?
Fastly, yes, I know that one.
Yeah.
Let's go
So
here.
I usually watch it, but this morning it took off on me, and I
what
was
is
like,
it?
I'm not gonna get in. So
What is that
only because I
ticker?
buy shares. So
What's the ticker again?
FSLY.
LY. Can't remember if it had to see. Get this on my. Get that on my way. Usually, the first thing I like to do when I look at something, I like to pull back to the 4-hour or day chart and see if it's been lately trending up or trending down. What's that? Since March 14th, we can see it's been on a little bit of a run. Yeah, it's had a lot in it. It's like been up and down a little bit. Oh, wrong thing. Sorry, I'm trying to get rid of this. We got decent volume on the day, but yeah. So are you bullish on this or trying to be bearish on it, or what are you
Bullish.
bullish?
But it all depends on the market.
Well, yeah, and that's let's see, what do they do? There's something to do with cars, right?
Mm-mm. They allow your
I'm trying to see right here.
I
Where's...
believe it's the application for companies to run faster.
Oh, okay. I thought it had something to do with like internals with like electric cars. Trying to think of what sector that would be in.
Technology, service.
Service, probably. Yeah, communication services, I bet. Just looking at this chart, for me, to be honest with you, we are trending upwards here. There is a lot of up and down. If you look at the 15-minute, we have crossed over the 200. We do have the 15 and 50 cross, but we're right back under it. We're pulling right back. It seems to me like there's a lot of pumping, maybe because of news or things like that, and then it pulls right back. To me, this is not one that I would be, at least on a short swing trade or things like that. If I was into a company like this, it would either have to be, and I don't think it moves enough to day trade, but it either had to be a day trade situation where you can play these ups and downs, or it would be something that I was interested in on a very long-term basis and hold it on a long-term basis like that. And I just don't know the company enough to be that bullish on it like that, or to have that much information on it like that. And if I was playing it long like that, I think I would probably prefer it to be over the 200 already. So
I had set an alarm because I believe it double bottomed today.
let's see, let me go back to the 3-minute.
So that's kind of why I was asking, just to see if I
Could be
was.
right in there, right back here. Yeah, for me, because you got to think, okay, if you're playing options on this, you want at least a $1 move, right? I mean, or at least close to it, because you'd like to have that delta cycle. Maybe if it had like a really good delta, of 50 cents or more, you might could do something in between, get you a quick $20 in and out, depending on how many you want to play. If it was cheap enough, then yeah, you could probably buy you 4 or 5 of them, do something like that with. Uh, but yeah, this for me, this would just be nothing that I would play on a short swing right now. Um, there's just so much up and down in it. Like, really, it would be more of a day trade to a long-term play. I put it like this. If you're looking to be bullish on it, and you're looking for an entry on it, I would watch my 15. As soon as we got this bounce off the 200, and you get your, you probably use the 9 and the 20, right?
Yes.
Wait for your 20 to cross your 50. See what your chart looks like. You're looking for the price to be above the bounce off this 200, this 20 to cross back over your 50, and that is where you want to start looking for this to be more like a, I guess you're looking probably for like a short swing trade. Is that right? Or are you looking to day trade it?
Day trade it.
Okay, day trading is a different story. Yeah, if you want to day trade it, look for this tomorrow. Let's go here. Here we go. Watch your pre-market. Again, you want to look for it to be, on this right here, we're not so much worried about the 200 right now. You want to see your 20 cross over your 50. Look for some type of confirmation, like a bounce off your 20 or off your 50. If you're under your 200, know that it can get rejected there. But again, like we was talking about with the other plays, play it to that. If it breaks over it, great. If it gets rejected, get out. But you want to see that 20 break over that 50, and probably, yeah, 20 break over the 50. You're looking for the 200. If it breaks over, great. If not, get out right there, right away. But the way this is looking for me, unless there's some type of catalyst in the morning, I'm guessing that this is going to get rejected at the 50 again, or possibly the 200, and come on back down. Unless there's, like I said, unless there's some type of catalyst coming, I just don't think from what I'm seeing that it's going to go up from here. But if it does, like I said, if you can look for that 20 crosses over your 15, I guess if I could show you back here what I'm talking about. Like this right here. So think of this as your 20, the green is your 50. When you get that cross, look for it to come back and touch one of them and bounce. Like in this case, as soon as it opened, it came back, touched the 50, bounced. That would be your entry point. Like that. That would be a good type of entry if you're looking at it in the morning. Other than that, if you see that and it doesn't bounce off of that 20 or that 50, it's not a good entry. I don't even know from there if I would play it back off this 200 like in this situation. But the way that this is set up right here, unless there's some type of catalyst in the morning, or maybe some good sentiment. I know you have this green bar here, but that's right in the end of day. That's usually where a lot of sometimes big money or just people jumping in for whatever reason. I don't know.
It tends to move with shop. Shopify.
I don't have my other one there, but I don't know if there's earnings coming up or anything like that on it. But yeah, that's what I would watch for if I was going to play it. I'd be looking for those that crossed. yeah, again with this too, right here, you can see like with Shopify, it's pretty much following this 50 with a touch of the 200 every once in a while and getting rejected. But for me on this, if I was expecting it to get back out of this, if I was expecting it to go bullish again, I would need to see that cross back over the 20 over the 50 and possibly even over the 200. I mean, you are pulled a little bit on Shopify away from the VWAP, and we might see a return back up here. But still, even in this situation, I just don't see any reason right now for it to continue up. That doesn't mean it can't. I mean, you can always look in the morning and see if it starts breaking resistance lines and getting over top of it and stuff like that. But just as it is right now, it would be one that I would watch. Like you said, set an alert. If it starts breaking those levels, then you can go back and watch it and look at it. But just the way it is right now, to be honest with you, I would see more out of puts in it than I would calls right now.
Okay. Thank you.
Is there anything else anybody wanted to ask or look at? Alright guys, I'm going to end it there. I appreciate you coming and hanging out with us. We'll do our next class next Tuesday, and we'll try to go into those fib levels, things like that. Tomorrow, I'm wanting to do kind of a midday type, like a kind of recap, I guess. This would be one, if y'all have any stocks you want me to look at, this would be the time to bring them all to me. We're going to go over what the market has done, what we expect it to do, and look at, I want to present a few plays of mine. If you guys have any plays or just any stocks to look at, anything like that, bring them. We'll take a look at them. We'll listen to the plays, whatever. The only question I have, and y'all can let me know this in the chat or whatever, would you rather do this right after the bell at 4, or would y'all rather do it like at the 6 p.m. time? You don't have to let me know now. Just let me know in chat, the live stream chat, whatever. And we're going to end it here, and I appreciate y'all coming and hanging out with me.
Appreciate you, bro. Thank you for your time.
Guys on YouTube, if you appreciate what I'm doing, hit that like and subscribe button, and we'll see you next time. Bye.